Welcome to the Proptech podcast. It's Kylie Davis here, and I'm delighted to be your host as we explore the brave new world where technology and real estate collide. I passionately believe we need to create a sense of community between the innovators and real estate agents and property owners, and sharing our stories is a great way to do that. Now, the aim of each episode is to introduce listeners to a Proptech innovator who is pushing the boundaries of what's possible, and to explore the issues and challenges raised by the tech and how they can create amazing property experiences. And special guest this week is Dean Fraser, founder of Brickfloor, a really exciting new Proptech for home sellers which guarantees that their home will sell for a market price, delivering certainty, peace of mind and price leverage for sellers, and allowing buyers to buy before they sell safely. So Dean is a lawyer and former investment banker who's also had a fascinating career innovating across food and fintech. And in fact, Brickfloor won Emerging Fintech of the Year in 2020 from FinTech Australia, and Brickfloor is also a finalist in the Proptech Awards. So here to tell us all about it, Dean Fraser. Welcome to the Proptech podcast.
Thank you very much for having me, Carly.
No, it's great. And I'm really excited about this conversation about Brickfloor. We always kick off with an elevator pitch. So tell us, what's the Brickfloor elevator pitch?
Yeah, sure. So we provide a product called a market price guarantee, which is essentially an upfront commitment to buy a seller's home for a market price that we guarantee for the length of their sale campaign, and which provides the seller with peace of mind, sale price leverage, and the ability to safely buy before they sell.
Okay, that sounds really interesting. Let's pick it apart a little bit. In a market as hot as now, why do I need a seller's guarantee?
Yeah, really good question, Kylie. So what we've discovered with our product through being in market for about 15 months before COVID came upon us is that our product was being used as both a shield and a sword. So in a weak market, the product provides certainty and peace of mind for home sellers, and also leverage in terms of a seller being able to use our price, or their agent being able to use our price in market to maximise and to seek a higher price from the market. In a strong market, there's a really strong benefit in buying first. If you sell first and you're out of a rising property market, you can be going backwards, obviously, against the property market you're trying to enter back into. So there's a real incentive for buyers to buy first. But at the moment, it's very risky to buy first because you won't have any visibility or transparency around whether your current home will sell and for what price it might sell for. Even if the market is strong, you still don't have certainty around that. So we give the ability for a buyer to confidently buy before they've sold, knowing that there's a guaranteed takeout for their current home, which can mean a significant saving in a rising property market, which is the current property market context.
So how big are these pain points that you're solving for, this anxiety around, will we sell for what we think we need to sell for in order to buy?
We think they're really significant. I think the pain point around just providing peace of mind and certainty to sellers, like most sellers find selling a home one of the most stressful experiences in their life. It's up there.
Amen.
Most stressful experiences based on a lot of research behind death and divorce, but it's way up there. We have done some market research around people wanting to buy before they've sold in the current strong market where it makes a lot of sense to buy first. And we've discovered that basically 89% of the market would prefer to buy first and then step two, sell, if it was safe to do so. And that's a big if, because a lot of people don't feel like it's safe to buy first, even in this strong market. We do see that basically 21% of the market will move forward and buy first, even though there is risk with that. And the main risk being you're going to need a bridge loan potentially. You don't know exactly what your current home is going to sell for. So maybe you've either overextended yourself on your purchase or potentially underextended.
Yeah.
But with our home price guarantee product or market price guarantee product, you can confidently buy first, knowing that you've got an absolute guaranteed rock solid offer on your current home. That's your floor price, and you can then use that floor price to work out your equity in your current home, plus the amount of debt that you can borrow gives you effectively what's safe to spend on your next home. So there's a really strong and big market for people who want to buy first, and we enable people to buy first safely.
So it's so super interesting, isn't it? Because I think the way the markets or the way the transactions are set up at the moment, this whole, it makes intellectual, financial sense to sell first and buy second. But we all know that homes are deeply emotional commitments. And if you sell first and then buy, you're basically tipping your entire family into homelessness until you find something to buy. And that's often more terrifying than the cost of getting the financial side of it wrong. So it is a really big psychological barrier, this whole idea that I have to give up everything before I can take the next step. Whereas if you let people buy first, then it's an exciting adventure to go on to their, to move into their new home, and we just have to get through the sale to get to that. That kind of feels like a completely different psychological kind of journey that we're asking people to go on, right?
Well, on Kylie, there's a really big dilemma in the market. Do you sell first and then buy, or do you buy first and then sell? And really, the drivers of people wanting to buy first, we've discovered there's really 4 key drivers. One is they don't want to miss out on their dream home once they've discovered it. Often people will discover their next home they want to move into before they're ready to sell. And it's like, wow, I love that home, but it's going to market in 3 weeks' time or 4 weeks' time. There's no way they're going to get things ready. They might get their pre-approval on their loan to purchase ready, but they won't be having certainty around whether their current home is going to sell for the right price to let them move forward. So there's a fear of missing out that you deal with if you can buy first with safety through our home price guarantee product. There's also just the basic people want to avoid 2 moves. So if you can buy first, you can move once into your new home, versus if you sell first, you're moving into your parents' house, you're moving into temporary accommodation perhaps. How long do you rent for? Is it 6 months or is it 12 months? You just don't know, because you don't know how long it's going to take to find your next place. So this double move issue is removed if you can buy first. The third one is selling first means that you're out of a rising property market in the current climate. And if you think about it, if the market's going up 10% per annum, which a lot of commentators are saying will occur, if you can buy first and then sell, you can save yourself 6 months or more in your time frame, because if you sell first, it takes you a month to get ready. It takes you 1 or 2 months to sell your home. You've then got to settle on it. And then you've got to start looking and finding your next place. It can be 6 months or often much longer. And if you're having to wait 6 months or longer before you next buy, and you've sold it already, if the market's going up 10% per annum, in 6 months' time, you're actually paying 5% more for the same home. So on $1 million property that you're looking to buy, as an example, you're paying $50,000 more through having to wait and sell first and then step 2 buy. So we're saying it makes a lot more sense, and based on our research, it makes a lot more sense for sellers to buy first, as long as they can do it safely, and to then separately sell. The other key reason why people want to buy first too is that they don't want to commit to selling until they know they've found the place that they like.
Why go through all that trauma if you then end up somewhere worse than where you are, or you just can't find what you need? And
you don't actually know where you're going. So to know where you're going before committing to sell makes so much sense. But the problem is there's no safe way to buy first. Absent our home price guarantee product, there is no way of buying first knowing that you've got absolute certainty around your sale outcome for your current home.
So tell me more about the home price guarantee. If I get one with you, do I have to sell to you? How does it work?
Yeah, so we basically extract some information from the home seller to come up with a price on the home. So we extract around 50 data points of information from a home seller, which can be done either online or through a telephone or Zoom conversation. We also get some photos from the home seller, and we use that information together with comparable home sales, data on market trends in our own pricing algorithm to come up with a market offer on your home. And we certainly do offer market prices for homes. We've bought 66% of the homes that we've put offers out on and that have been accepted by customers, we've ended up buying. And I'll explain our sort of business model around buying the homes a little bit later. But we certainly offer fair prices. We buy homes. But as a seller, your experience is that you'll provide some information to us. We'll then provide you back with an offer on your home within 3 business days. If you're happy with that offer, you have 7 days to accept that offer. If you accept it, we then come out and we do a physical valuation on your home. So we want to make sure if we're offering you $1 million as Kylie, the seller of a home, we want to make sure that it is a fair price. So we do come out after you accepting that offer and do a quick physical inspection. to make sure everything as we expect it to be. Assuming we firm up the number, which 95% of the times we hold our number, very rarely do we change it unless there's like a pest or building structural issue with the home. We firm up the number. You then have a commitment from us for a period of 90 days. So we've locked in, let's say, as an example, $1 million for a period of 90 days. That gives you 4 weeks to get your home ready, as an example, 4 to 8 weeks on market, and you've got certainty, absolute certainty that your home will sell for at least $1 million all along that way. What we see that it means for sellers is that they can actually celebrate their sales success from the minute that they list. They're not worried about whether an agent has sort of over-promised or under-promised on the number. They're not worried about whether COVID phase 4 or 5 or 6 comes in. There's certainty. And the agent that they're working with, so it's an agent-friendly process where the seller still tests the market to try to get a higher price if there is one out there. The agent we're seeing can actually use our offer in market to leverage a higher price from other buyers. And on average, we've seen in our testing in market, in real life sort of customer case studies, we're delivering 8% higher sale prices, being the difference between what the agent was getting an indication back from buyers in the market before talking about the fact that there's already an offer on the home from Brickfloor to where the ultimate sale price went to. There's about an 8% increase on average with our customers' homes. So there's a real benefit in being able to leverage our offer in market through both the agent and the seller using our offer as price leverage. And at the end of the sale campaign, either there is a higher bidder in market, in which case the seller will sell to that third party. We charge a 2% fee on the amount that we commit to. So if we underwrite $1 million, our fee is 2% of the $1 million or $20,000 payable at settlement. If the home doesn't sell or if there's a lowball offer, we step in and we buy it for that pre-agreed price of $1 million. And again, we charge that 2% fee on the $1 million that we've guaranteed. We don't charge any fee on the additional that's achieved through leveraging our offer, which the seller might get $1.1 million as an example. But our fee is structured on the $1 million that you
valued it at. Yeah.
Yeah.
Okay. And now let's hear a word from our sponsors. For almost 16 years, Direct Connect has made moving easy for over 1.2 million renters and homeowners by arranging connections to a wide range of services, from electricity and gas to internet and pay TV. With a national team of local account managers who are experts in the industry, Direct Connect are there to support your real estate business with competitive rewards for every successful connection, plus an industry-leading rewards program. The connection process is simple, and Direct Connect's always-on guarantee ensures your customers will be connected on the day they move in. Direct Connect offers a range of market-leading suppliers, and Direct Connect has now made it even easier than ever to send connections directly integrating with MRI Software's Property Tree. So in just a few clicks while processing a tenancy, you can send the connection details through and get your customers connected. To make the right connection and find out how Direct Connect can make moving easy for you and easy for your customers, visit agents.directconnect.com.au or call 1300 558 169. Is Brickfloor like an Aussie version of an iBuyer tech that we're seeing out of the US?
Yeah, it's a really good question. It certainly has overlaps.
Got elements.
Yeah, for sure. So we provide certainty and peace of mind to home sellers. So that's absolutely something very similar to the iBuyer market. We also use technology to come up with an offer on the home. So we look at currently 50 data points of information. We have our own pricing algorithm to work out what we think that home is worth. And we also look at standard things like compatible home sales. That's kind of where the difference is. And because the iBuyers overseas don't let sellers extract a higher price from the market. They don't let the seller test the market.
Yeah, you sell it for what they offer you or don't. Yeah.
You get the benefit is that you get paid within 7 days from the iBuyer. But then if you've left a little bit on the table as a seller and there's a little bit more out there in the market, the iBuyer in the US takes that increment because they renovate the home and then sell it within 3 months typically. Whereas we're saying to sellers, if there's a little bit more out there in the market, then you really deserve that. Like you deserve the peace of mind, you deserve the leverage to extract a higher price, and you deserve to be able to buy before you're sold. But any extra price that you can achieve is really for you. It's not for us as a business. So we think we're kind of a lot better and more adapted for the Aussie market through letting people achieve that dream price that they want. We lock in the market price, but we give them a better chance of achieving that dream price through leveraging our number. The other big difference is around our property fund. So the way that we underwrite and guarantee a home sale price is we have a fund behind us and capital behind us to actually buy those homes in the event that we're the highest price in market. So we have a long-term hold strategy in our fund. So any home that comes into our fund, because we've been the highest price in market, and to date that's been 66% of the times, we put the property into a fund. And we basically want to institutionalise residential property as an asset class. So we want to build a big fund of homes where we get institutional investors such as super funds and other family offices and big investors into residential property, because everyone understands it. But no, not many big institutions have exposure to it because it's hard to get a streamlined and scalable business model that allows you to accumulate enough homes, and ultimately the returns may not be as strong as commercial property returns on a yield basis, but on a total return basis, including capital growth, residential property has historically been a lot better than commercial property. So we're different to the iBuyers in that we buy homes, we hold them for a longer term period versus the iBuyers who kind of buy a home and would look to sell it within 3 months ideally.
Right. So you're holding them as an asset and encouraging other investors into that asset class.
Exactly.
To grow your fund. Okay. Yeah. Wow. Okay. It's taking me a bit to take this all in. So just step me through again how it works with real estate agents. How can agents understand what Brickfloor does for them so that they're not scared of it, so that they actually see that it's an asset?
It's a really good question. And we have had initially, like we've been partnering with some of the large agents in Victoria since we sort of started the business model, and they've seen the product as a listing tool. Yep. So when they have a relationship with a seller, or maybe they don't, if they're able to say to the seller, don't worry about your home not selling. And even in this current market, like if you're being asked by your agent to invest sort of 10, 15 or maybe even 20 grand in some expensive homes in marketing, like that is a lot of money that you have to invest with risk around whether your home will sell. It may sell, but often there are like more than one property market in Victoria and in New South Wales where some markets are going or suburbs are going super well, others are not doing as well. So there is risk around investing a lot of money into marketing with where your home might not sell, and yet you're still on the hook to pay your marketing fees. So agents see our product as a way of alleviating that concern, also of showing some innovation and differentiation where they can say to the seller, don't worry about your home not selling, we can guarantee that it will sell. And by the way, we can also qualify more buyers for your home in market, because a lot of sellers obviously appreciate that the way that they get the dream price is through having 2 or 3 really motivated buyers. And often what happens is that a lot of people coming through your open for inspection as buyers are not qualified to buy because they haven't sold.
Yes.
And so they might have approval, but they're going, well, I don't want to move forward. And I've seen it firsthand when I walk through open for inspections, when some agents will talk to different buyers, and one of the first questions often is, do you need to sell? And often the agent will, if it's a yes, I need to sell, often the agent will just almost dismiss that buyer, and then we'll walk around the room and try to find other buyers who maybe are more able to move forward. But if that agent is able to say to that buyer, okay, well, don't worry about the fact that you need to sell, get a home price guarantee or a market price guarantee from Brickfloor. Within a week, you know that your home is guaranteed to sell. You can now move forward in my current home that I'm selling. And by the way, I'll help you sell your home that you need to sell. So it's a way for them to win another listing from the buyer. So the agents who can kind of see that the product is designed to help them win listings and to give certainty and peace of mind to the seller, and also as a way of qualifying more buyers who may want to buy the home that they're selling but need to sell first, they're the agents that we're working really well with. And as with any new innovation, like often there is some sensitivity around, what does this kind of mean for me? Do I kind of miss out on the customer or anything like that? But, it's really clear cut that, if we're getting a referral from an agent, that we're super grateful for that. We often become, sort of a co-partner effectively. We have our fee that we charge, which is separate and for a different product or service to the agent. So the agent still gets their fee if they're referring through to us. there is an extra fee payable to Brickfloor from the seller's point of view. But what we're seeing in market is that through having the home price guarantee in place, there's three things that are occurring. One is you're avoiding a potential bad outcome for selling your home, which may not always occur in a strong property market, but on average over 10 years, there's been sale discounts or vendor discounts of about 4% in Melbourne and Sydney.
Yep.
So you avoid the risk of a 4% discount. We've seen sellers leveraging an offer for a higher price to the tune of 8%. So you're getting the ability to get up to 8% higher or potentially more for your home through your agent leveraging our price. And then you're buying before you've sold. And if the market's going up 10%, as I sort of mentioned before, and you're buying 6 months sooner, you're saving 5% on your purchase. So there's a real clear value proposition, we believe, for our product, that you're paying 2% for our product. Yes, you're paying separately to the agent and paying their fee, but our 2% can deliver you, and we expect it to deliver you around about 10% more, whether it's through avoiding the discount, buying sooner and sort of paying 5% less, or leveraging our offer to get 8% higher. You're getting a real benefit that's way above the cost of that product. So,
yeah. Well, I just think that peace of mind. I mean, look, anyone who has bought or sold their family home and moved everyone up knows how stressful that is. I mean, it is full of the worst conversations you never want to have with a spouse or partner. And I remember some of the most stressful ones with my husband when we moved, which was 20 years ago, and we still haven't recovered from the trauma of it, was standing at auctions before we'd sold, and my husband saying, "Do you love it?" And I'm like, "Well, yes, I quite like it." He's like, "No, do you love it? Do you love it enough for us to go through this pain that we're about to go through?" And often it was like, "Oh no, I don't know," because that's such a big hurdle to jump over. But if you've already know that you've sold and everything's okay, that does kind of change that.
Yeah, one of the highlights that I had about a year ago was a customer who came to us, and we underwrote a sale price of $2.34 million. So it was a really nice house in Glen Iris. He went to market. It passed in. There was no offers at auction. And Marshall White were running the sale campaign. They did a fantastic job, but there was no one there to bid. He calls me up straight away and goes, "Are you still there?" As
my backup.
That's the whole purpose of the business model. He goes, "Well, so can I have a wine with my neighbour tonight to celebrate the success of the sale?" I said, "Absolutely." I said, "I'm going to have one too at home to celebrate with you, virtually." But the feeling I got from that seller was that it had an absolutely massive impact on not only his emotional well-being, but his financial well-being too, because he'd bought somewhere else. And he was under a lot of pressure to make it work. And the beauty of the whole transaction too was that 2 weeks later, he got an offer from a third party at 2.2, so below our number. Marshall White and him were able to say, "Look, nick off. We're holding firm. We've got a price, materially above your offer." And eventually, he extracted 2.4 from the market, like 4 weeks after auction.
Yeah. And
he sold for 2.4, above our 2.35 offer. But he had so much gratitude, and we were so grateful to work with him as well, because he said, "I would have accepted 2.2 if it wasn't for you at 2.35, and ultimately I got 2.4. So in that example, he got 9% higher than his 2.2.
Yes.
So it has a really positive impact on the sellers, both financially and emotionally. And some sellers, say things like, "This is securing my future, this product."
And my marriage. No, seriously, I don't think you can underestimate that. It's the stress of selling. The stressful conversations that happen in marriages when you're both selling and moving. So Dean, tell me about your background. How did you get into this?
So I started my career as a lawyer back in 2000, and then I did that for about 3 or 4 years. Then went into investment banking up in Sydney with a firm called Caliburn Partnership, and through both my sort of Mitchell Allison days as a lawyer and Caliburn days as a banker, like you could see people underwriting share issues for companies. So you have Goldman Sachs, Macquarie, UBS, getting paid a lot of money to actually guarantee the sale price, the sale timing, and the sale outcome for a company that's looking to raise capital. And I thought that's a really good product and a well-established financial services product of underwriting for capital raising in sort of a corporate context. And I thought that should really apply to some other sectors. And then, clearly I could see residential property as one that was standing out as huge amount of stress and anxiety and, divorce ridden potentially as well. Like a lot of those issues that could be, I guess, cured with certainty and peace of mind wrapped around them through underwriting. And so the home price guarantee or market price guarantee was a way of providing that underwriting, but for the residential property landscape. And then we did some surveys with home sellers, and it was pretty clear that sellers were resonating with the concept. And then I got Matthew Quinn involved, who was a former CEO of Stocklands for about 13 years. And he was like, I love the product. It's very different, and there's a real problem there to be solved. And then it just sort of all went from there. We then raised a fair bit of money from the venture arm of ANZ Bank originally, and Harris Capital, Jeff Harris is the co-founder of Flight Centre. We raised some money and we've gone to market, and now we're looking to sort of scale and raise more money and diversify our shareholder base as well. But it also started through that sort of just a past work experience, seeing something that had kind of been used and
in a different market. Yeah, awesome. So how big is Brickfloor?
So we're still very much a startup. So we have around sort of 7 people working with us. We've raised a bit over $50 million, which is a lot, but a lot of that was earmarked for our property fund to acquire homes. So we're very capital intensive. Our property fund, there's 2 parts. There's a property fund that buys homes, and that's very capital intensive. And then there's a Proptech consumer code business manager, fund manager business that actually employs staff and owns the platform and technology. And that's capital light, but there's kind of two parts of the business. But the fund piece requires a lot of capital. So we raised a little over $50 million a couple of years ago. And we've got, we've sort of built out a team. We had to scale back a little bit our team during COVID because we paused temporarily in market because it was very hard to price homes with precision. We're now looking to get back out very soon. We're going through a capital raise process now to raise between sort of 50 and 250 of equity, $1 million of equity, so a lot of money, but you need sort of strong capital base to underwrite homes in the way that we do. So it's sort of exciting times now, looking to get back out into market and use some of our, as I sort of talking about before, people wanting to buy first, using our market price guarantee product to actually we're looking to create a new or a market first buy now, sell later home loan product. So really, at the moment, the only option is a bridge loan, and nobody likes bridge loan.
No one likes them. They're like the credit cards of home loans.
High cost. Sometimes the cost can be not too bad, but just the thinking that you're going to have to sell your home under pressure, current home under pressure, because you've already bought is not a good feeling and won't get you the best outcome, generally speaking. But if you can create, a loan and a guaranteed sale assurance on your current home, combine them together, then you can actually buy first and settle with confidence, knowing that your current home is going to sell for at least a floor price agreed with Brickfloor. So, so there's some really exciting things that we're looking to do following this capital raise that would kind of leverage both our property fund and our market price guarantee product to create some new sort of lending opportunities for lenders and some other products and services as well.
If you're a real estate agent, you know you need to do more digital marketing, and that includes creating articles, blogs, emails, and landing pages. But that's a lot to learn, and it can be really hard. So check out Activepipe. Activepipe is a specialist digital marketing platform designed especially for real estate agents. It allows you to quickly and easily create engaging emails, including the ability to drag and drop properties into emails that you can send out to buyers, sellers, renters, anyone. Activepipe's smart automation allows you to get more leads from your database by understanding the property journey of your contacts and automatically customising and personalising emails based on their preferences. And now with the new product, Real Estate Content, you get access to hundreds of stories written about the property market that answer common questions your clients have about how to buy and sell and market performance. So download Activepipe's free white paper, The Scalable Agent. It's got everything you need to know about how to become a better digital marketer. And it's written by me, Kylie Davis. Go to activepipe.com.au or Google The Scalable Agent.
So, Dean, do you have any competitors in this space?
No, there's no one active in the market that's doing what we're doing. I think for us, we feel the main competitor is just the status quo, that people are selling their home, the most valuable possession that typically that they own, in a risky way. So there's a risky way of selling your home, and then there's a safe way. So we're looking to challenge the status quo and say, look, there is a safe way, and not only is it giving you certainty and peace of mind, but it's giving you leverage and the ability to buy before you've sold, which are really important things in a strong market. So no direct competitors, but just it is to get people understanding of the product and to change the way that they're currently thinking of selling a home is, being the status quo is kind of our biggest competition.
Yeah, but I think given everything I've seen, all the research I've seen and just all the stories that I see, and especially from the focus group research when you have talks to people around what it's been like to sell or buy a property, there is an I think as an industry we gloss over the trauma that people go through, and so I think it sounds great. Do you think you're going to be traditionally country or regional markets would have more trouble selling or longer time on market periods than city markets? Are you covering regional markets as well, or is it just the city, or is there a risk that you might end up with sort of geographically lumpy markets?
It's funny because with our leads and our customers that we've had, it's basically been a third in terms of inner Melbourne, inner ring, middle ring and outer ring. So we're getting a spread, and same with Sydney as well, which is good because we want to have a bit of diversification, and there is like that theory, I guess, that maybe some middle and outer ring properties might do a little bit better now with deurbanisation. Now, how long that will last for and whether it reverses is sort of another question. But we definitely want to build a portfolio of great Aussie homes. And I think the fund that we've built as a result of our product is certainly diversified across those sort of inner, middle and outer rings. We haven't offered our product to homes located more than 50 kilometres outside of Melbourne and Sydney to date. Right. But I think there are opportunities to consider, like Geelong or maybe sort of Newcastle or maybe Bendigo or Ballarat or some regional hubs that could do quite well over the next sort of 3 to 5 years. So we're certainly open to exploring that. But today we've been a little bit more focused and just looked at essentially properties worth $350K up to $2.5 million, houses, townhouses, units, and some apartments, but only if they're one of 8 or less. So we don't want the high-rise. We're not helping at the moment sellers with high-rise apartments. And then the home needs to be located within 50K's radius of Melbourne and Sydney CBDs at the moment.
Right. Okay.
And then also when we reopen, then Queensland, we're also looking at providing offers to Queensland sellers. Okay.
So at the moment, Melbourne, Sydney predominantly, and then Queensland to come.
Exactly.
Yep. Okay. So Tassie, South Australia, Perth, you guys will have to wait.
Yeah, look, and if we feel the demand from there, and if we feel like we can price with precision, and if we feel like it's a sensible investment, which it most likely is, to be honest, then we'd look to sort of expand into those cities as well.
Okay, awesome. So Dean, what do you think the next 5 years holds in residential real estate, especially if we adopt this thinking around security and taking the risk out of selling that Brickfloor's driving forward?
Yeah, look, I think that's a big question, actually. I think almost as important as selling and giving security around the sell side is buying, because it's another big pain point to actually just find the right place and to perhaps do whatever you can to avoid as much competition as possible. And I think that's where kind of creating sort of like a buy first loan product or a buy first product that we're looking to do would be very helpful. And we've seen one of our customers who bought first, he effectively was able to buy before the home went on the market because he could buy with confidence. He knew he was all set up. He had his pre-approval, he had his offers from Brickfloor, he knew exactly what was safe to spend, and he just went in and he made an offer before the home went onto market. And the seller was happy to sell pre-market because they had a bird in the hand. But I think that's an example of just I think there is still and always will be a big friction point around selling, and there will always be a really big issue around being able to find somewhere to buy. So I think there'll be more and more products that sort of focus in on both of those ends of the spectrum. I wouldn't be surprised too if we saw more just more Proptechs, whether it's the portals or businesses like Brickfloor or similar ones moving into kind of that. Whether it's lending or mortgage broking, because we've seen like with, obviously Domain and the lending partnership and REA now sort of taking a stake or purchasing Mortgage Choice and having smart line exposure. Like I think a lot of the portals and other businesses, they're a bit, and even Brickfloor, like we're quite transaction focused. Like we depend on a specific transaction to make money. Whereas if you can move into that kind of more annuity style income in terms of whether it's mortgage broking and taking kind of a clip on the upfront and then a trailing commission or some other annuity style income, then I think that's kind of a smart strategy. So I think we'll see more people moving into that space, particularly if they've got strong brands. Like, I mean, banking is super competitive, isn't it? Like it feels like every loan is very similar out there. But if you've got like a really unique brand or a unique audience focused on millennials or a strong brand, then I think there's opportunities for them to kind of use those customers or that brand to kind of move into an annuity style of income through competitive loan products.
So you guys are also looking, so you're purchasing a whole pile of properties, obviously, and you said before that you were looking to bring in more institutional investors into the property market and ownership. How's that going to play out over the next 5 years? What influence? How will that sort of change the landscape?
Well, I think there's a huge opportunity there with super funds and the like that really are looking for yield, and a lot of people are looking for yield. Not only super funds but retirees are looking to generate yield on their cash at bank or on their investments. So I think and Resi's just performed so strongly over such a long period of time, and to some extent it's not protected, but obviously there's a lot of support. No one wants to see residential property fall, and it obviously can fall, but I think governments and the like will provide support to that sort of asset class to some extent. So I think it just makes a lot of sense for people to park money in resi, and so I think there'll be more and more money flowing into it. But there are challenges around how do we, if you're an institution, like you're better off writing one single check for $50 million and buying a shopping centre versus $51 million homes. But we feel that our product allows a super fund to really streamline more easily into buying $51 million homes through our product, because it's designed to pick up homes into the fund. So we can fix that, and then I think we can get the returns right through being really quite strategic in where we buy homes, and maybe perhaps where we put more offers out in particular areas that are likely to perform strongly. So then we kind of get scalability and strong returns, and therefore all of a sudden residential property becomes as attractive, if not more attractive, than commercial property. And most big institutional investors might have 15% or 10% of their fund allocated to commercial property, but nothing really in resi, or very little. They might have some developments, but they very, very infrequently would have established housing. They might have some build to rent that they're thinking about doing, but it's very small components. So I think there's just a big opportunity to kind of to create a platform for investors into resi. And then I think the exciting thing for us too is that if we can do that and build out a big fund, then we can create an affordable housing allocation in our fund, which has always been the intention, to have 20% of our fund allocated out to half price rentals. So then we can have people who need a home and need a bit of a leg up but can't afford to pay current rentals. They can move into some of our homes, and we can make a bit of an impact in that way too. So I think, and that's consistent with super funds and the like too, who are looking at sort of more socially focused investments, as long as they stack up financially. If they can also have an impact socially, then I think it's a really strong proposition for
fantastic. Yeah, because there is a lot of desire to invest in in social housing, but no real vehicles for it at the moment. And so the effort to do it just seems a bit too hard in so many ways. That's fantastic. So do you think if we start to see, like they say in the States, where Wall Street starts to take over Main Street in terms of residential property ownership, is that going to affect prices? Will it make the market more unaffordable? What?
It's a really good question. See, with our model, we're buying the homes in our model that don't sell to a third party. So it's not like we're removing or sort of forcing out buyers. We're really buying when there is no other buyer. And sometimes we are forcing buyers effectively to pay a little bit more because we're there as the underwriter. But often when we're buying when there's just, for some reason or another, there just hasn't been a buyer at that time for that home. So it's not like we're sort of creating sort of an artificial market. We're sort of supporting the seller. And then I think really if you're creating more, if you're creating a vehicle that enables a seller to more easily sell their home, there's going to be more liquidity in the market. Like there's this kind of like skipping rope analogy almost, where people go, oh, do I sell, do I buy? And it's like when you're a primary school kid and the skipping rope's going around and you're watching it go, but you're not really wanting to jump in and
get rope burn.
Forget about the whole thing. So, but if it's not scary, then you're going to be, and hopefully with stamp duty changes as well, it's going to be more easy for you to put your home on the market and sell with peace of mind, and then to buy somewhere else. So we think giving people confidence to sell and to buy, it should create more volume in the market, more liquidity, more sort of movability for people who want to change locations. And it should be sort of a net positive for like real estate agents and for mortgage brokers, for banks, and for people who just want to be able to change locations and change homes to suit their needs.
So what do you do with all those properties that you've bought? Do you rent them out or? Yeah,
so we rent them out. So all of our homes are rented. We rent them out, and hopefully they enjoy some good capital growth. Our first fund that we've kind of built out has had some really strong capital growth, even though we bought quite a few of them during COVID, which was great for the seller because they had a whole lot of stress when they were selling a home that was amplified by COVID. And we honoured our commitments and we bought homes, and it turns out that they've done well because the market has since recovered. But we buy them, we hold them, we look to sell them maybe every sort of 3 to 5 years. We can hold on to them for longer, or we can sell them sooner. But we're looking to create sort of an asset class effectively out of residential property that's diversified and strong returns.
Fantastic. So, look, thank you so much, Dean. This has been an amazing conversation. I've been really interested to hear about Brickfloor and the potential, the removal of all of that stress and the potential that it opens up for so many other better experiences in real estate.
Thank you very much, Kylie. It's been a pleasure to talk to you, and I really appreciate your time.
Now, we're going to include your contact details in the show notes. So if any agent or if anyone wants to get in contact with you, the details will be in the show notes.
Oh, fantastic. Sounds great.
Thanks so much.
So that was Dean Fraser from Brickfloor. And isn't it a fascinating business? We've been hearing for years from the US about this phenomenon of iBuyers, and I love that Brickfloor is a truly Australian version of it that's also responsive to how our market behaves. Over the past 5 years, there's been a growing body of evidence that one of the key reasons property supply levels are so low is it's because of this huge fear that we have as sellers that buying up and upsizing just might not be worth all the pain. Increasingly, sellers are asking themselves, is it really worth going through all that work and stress of getting the house ready for sale, of going through the sale process, only to find out that actually there's nowhere better to move to, and in fact, you're worse off now because you're homeless? The intellectual property as an asset argument has always been that you sell first and then you buy. That's the most financially sensible thing to do, apparently, because you know how much money you've got to spend, and bridging finance is a complete punitive horror. But if the worst comes to the worst, you just rent and you ride it out until it's over. But how does that actually play out today in 2021? Well, with so little stock on the market, there's absolutely no guarantee that you'll find something better to buy, especially if you're trying to move up locally. It's one of the key reasons there's so much renovation going on at the moment. So you sell your current home, you can't find anything to buy. It's also extremely hard to find places to rent, so you have to go through all of that pain kind of twice. And then you end up on an adventure into an unknown of housing insecurity and watching prices gallop away from you while eating up your capital with the rent. Suddenly the financial logic of selling doesn't really feel that sensible. But I love how Brickfloor is changing the psychology of all of that. It recognises that selling is a deeply emotional experience, and it works from there to make it a more sensible financial exercise. If we find something that we want to buy first, we can put all of our energy into imagining how awesome our new life is going to be, and so the pain of selling doesn't seem so bad. I also love that it's such a powerful tool for real estate agents to use to underpin how they present the property to market and around pricing. There'll be no more arguments from buyers who miss out about the price guide if there's a price guarantee sitting behind it. And the fact that the product is also providing an avenue for institutional investment in property, that's really interesting to explore, and I think it provides wins all round. So well done, Brickfloor. Now, if you've enjoyed this episode of the Proptech podcast, I would love you to tell all your friends or drop me a line either via email, LinkedIn or Facebook. And I am sorry we've had our episodes missing for a few weeks while we've got through the Proptech Awards. But you can follow our podcast on Spotify, Google Podcasts, Anchor and Apple iTunes. And I'd like to thank my audio support, Charlie Hollins and the fabulous Jill Escudero, and our sponsors Direct Connect, making moving easy, Smidge Wines, exclusive wines made in limited quantities and available only via the cellar door at smidgewines.com, and Activepipe, helping you make engaging content for email marketing. So do you run a PropTech business, or are you a founder of a PropTech? Make sure you join the PropTech Association of Australia. It's Australia's new not-for-profit association made up of tech people who are passionate about the property industry and committed to improving experiences in how we buy, sell, rent, manage, build and finance property. Joining will give you access to events and networks across Australia and globally that will help promote and grow your business. So go to proptechassociation.com.au and sign up. Thanks everyone. Until next week, keep on PropTeching.